Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Monday, July the 18th, 2011. Well, a continuation of the trend to the downside today. We have a candle that's made a lower high and a lower low. A large red body candle denotes the sellers making net bearish progress on the day between the open and the close, and a fairly large amount of net bearish progress. Having said that, however, the bears were unable to close this market in control. We can see that the market is closed between the high and the low, so it's closed mid-range, which means that neither side has taken control of this market throughout the trading day, and that does raise some doubt about continuation of the trend to the downside. We can also see the large shadow on the bottom of this candle, and that represents upside price rejection, or it represents the sellers losing commitment as the market tested down to lower levels. Now, those lower levels that the market tested were around the 1300 area of support, and we highlighted previously that that was going to be a very strong area for this market. And we can see as the market tested below there, the buyers came back in quite strongly. Now, we've highlighted this yellow area as a zone of support for this market. We can see previously that that was a zone of resistance, and the shadows on the top of these candles highlights the downside price rejection, and we know that support and resistance can be interchangeable, so that sets this zone up as a fairly strong level of potential support, and that extends down to roughly 1287, 1288. But certainly this round number 1300 is very, very important for this market over the next trading day. In Ichimoku charts terms, the market is trading down below the cloud, so the market maintains its overall negative bias. We had that breakout to the downside some days ago. We also have a market that's bearish in the medium-term and fast-term timeframes by trading down below the Kijun-sen and the Tenkan-sen, so bearish market in those faster timeframes. The market is trading very close to the Kijun-sen, so it's quite fairly neutral, although technically it's bearish because it's trading below, but certainly not as bearish as the market in the short-term time frame, because we're trading a long way down below that Tenkan-sen. Now, the Kijun-sen had previously turned flat, and when that turns flat, price action tends to be attracted back towards her, and that's what's happened here. Over the next trading day, certainly the area around 1300 is very, very strong support, extending down to 1288. Down below there, we have support down to around 1275 if the market does test down to those areas. To the upside, however, we have very strong resistance for this market. The 1313 region was a previously strong area that will potentially hold up, and then certainly have resistance all the way through the cloud, and that extends from roughly 1310 up to 1318. Above there, we have resistance around the 1324 region up to 1332. And also at the Tenkan-sen, which is trading at 1326. So a market that's bound by very strong support below, extremely strong support, and strong resistance overhead. We do need to wait for a breakout in either direction.